Hi everyone. In today's Collecting 101, we continue the discussion about purchasing. But really I'm going to branch out a little bit on this discussion and talk about collecting and purchasing as an investment. We're starting to see more and more people approach collecting as an investment. And I think it's important for us to talk a little bit about what that represents and really what you can expect out of that. Today I'm going to go into a little bit into that discussion, and I'm going to show some patterns and some comparatives at a big picture level. I am working on another video that will be a little bit more detailed by system collection as far as investment component. But that's going to take a little bit more work. It's quite a bit of analysis that I'm preparing to showcase and share with you all. Now, before I go into the details, a good reminder, please make sure that you subscribe to my Facebook group, link down below, and good place for us to share and talk a little bit about some of these views. So to answer the question, are video games a good investment? I went and looked at a lot of historical data. And what we did here, with the help of my wife, thank you, we went and did a random selection of games from my collection using a random number generator. And from that, I selected a total sample size of 373 games, which provides a representative sample for around the collection size, around 20,000 games. Why did I use 20,000 games? Because overall, a complete North America collection is somewhere in the ballpark of 20 to 22,000 games to have an entire North American collection of every single video game released. So with the sample size of 373 games, that gives a confidence level from a statistical perspective of a 95% confidence level. From there, I used price charting as the main location for historical data on pricing of video games. Now here comes some disclaimers from this analysis. For those that have used price charting before, it's a really good website. It has almost any game that you can think of in there as far as a reference point on pricing. But some of the downsides of price charting is historically the prices and price charting a little bit off. I found that the games can be typically about 10 to 20% off on pricing. But nonetheless, it provides a good representation of the overall market and tendencies in the market. Hence why I still opted to use this. The other downside with price charting as well, and it's really the amount of data points that they sometimes have on sales. And what I mean by that, especially for rarer games, some games are so rare that you only see about 1 or 2 sales of that game a year. And you know, trying to draw statistical representation of how pricings or behavior becomes a little bit tricky when you have that low of a frequency of occurrence of sales. Nonetheless, right now it's the best source of the data that I had available. And overall, again, it's a really good representation of price tendencies and how they behave. So from the data points in price charting, we took measurements of every January through a 4-year period, starting in 2017, and then how it behaves year on year. Okay. And we looked at a couple different aspects into this. The first one was, how do loose games behave? So just buying the loose CD, the loose cartridge, how do they behave? And overall, it's not bad. Loose games had an average valuation yearly of about 5.8%. Okay. Now you'll see the behavior of the curve that I'm showing. It does have a little bit downward trend, but it picks back up. So what does that mean again? And this works on any investment. So you have some good years, bad years, but you always play with the overall averages. Okay. Here's the other disclaimer. I only looked at a 4-year period. If you look at longer periods, you might draw slightly different conclusions, but for the brevity of this initial analysis, that I just wanted to look at how it behaved over this time frame. Now, what does this mean, a 5.8 valuation? Okay. if we look at it and compare it against inflation, it beat inflation by over 17.6% over a period of 4 years. So this tells us that video games and purchasing video games in a loose format, you're gonna maintain the value of your purchase because it's gonna beat any depreciation from inflation, and actually it will still gain some value with time. So any investment that maintains and beats inflation is typically considered good. Now obviously there's good, better, and you go into best categories on investments. Okay? But always remember, every investment has risks. Now, I also wanted to do a comparison on how it compared with stocks. So in here, I threw how it would behave against the S&P 500 and the NASDAQ. And the way I did this is I grabbed the average rate of return against each one of those years for each one of the, for the NASDAQ and the S&P 500, and applied it. In other words, if we had invested this initial $3,800 to buy these 373 loose games, how it behaved, instead if I had invested that same amount of money into the S&P 500 and the NASDAQ. And if we look at these last 4 years, and again, I'm using data points from January, 2021 has been a bit of a ride on stocks as well. But if we look at simply the current data points, the S&P 500 and the NASDAQ significantly outperformed the purchase of new games and their valuation. Again, you always got to take these analyses with a bit of grain of salt, because we're really in a bull market where stocks have been going up very aggressively, especially over the last 2 years, as the economy has been going through a strong recovery through COVID. So if you ask any stock analyst, is this slope on stocks common? The answer is going to be no. Okay, we've been seeing a very aggressive growth in valuation. The truth is, and you'll see from any investment manager, portfolio manager, they'll always tell you average good rate of returns are somewhere around the 8% a year ballpark. It's considered a pretty good, healthy rate of return. Anything above that is, hey, that's phenomenal. Okay? So overall, loose games hold value, decent rate of return on valuation, but they don't touch S&P or the NASDAQ. So next, we want to look on how this compared against complete in-box games. And complete in-box games are games that come the box, the manual, and the game itself. Now, I didn't discriminate on the condition of a complete in-box, whether it's mint condition, poor condition. I just did overall just complete in-box. Okay. Now, here was really interesting. It definitely outperformed loose games. If you recall, the loose games were averaging 5.8% a year. Complete in-box games are averaging almost 10% a year, which is really good in an investment portfolio. If you can maintain a 10% rate of return, wow, that's really good shape. So definitely better than loose games. Now, how did this compare to inflation? As you would expect, it significantly outperforms inflation with a 37.8 gain against inflation over a period of 4 years. So definitely a good investment compared to inflation. And as we look into the same comparison with the S&P and the NASDAQ, it starts to encroach quite a bit the S&P. Some games in this 333% comparison actually significantly beat both the S&P and even got close to the NASDAQ. So definitely you can see some significant improvements on valuation of complete in-box games. The last analysis that we did was now looking at new games. And honestly, this was a bit of a surprise. I expected new games coming into this analysis to be the games that provided the best valuation, best rate of return, because you would think they were the rarest. There's fewer new games, especially of some of the older systems, in circulation than complete in box games. But to my surprise, they only had an average valuation around 4.9% a year, which is, again, not bad. But if you recall from some of the previous graphs, loose games were even better than this. What? I know, right? This is strange. So again, when we compare it against inflation, it outperforms inflation by 13.3% over 4 years. So again, the good news there is you're going to maintain the value of those new games, and they're going to gain some value with time. But when again you compare it to the S&P and the NASDAQ, they're left really behind into this, with the NASDAQ significantly outperforming the valuation of new games. Now, here's the other grain of salt in this analysis. When I was starting this analysis, I chose to standardize my measurement points from January to January so that I tried to maintain a consistent rating on the values and consistent timeframes. But what I also started to notice is from January to October this year, a lot of the new games actually have had a different slope in their valuation and have gained significantly more value. And my theory behind that significant gain has been from all these news that we've been hearing this year about these high value auctions for graded games. And I think there is quite a bit of a hunt right now of people looking for these mint new games to try to put them into a graded format to try to then flip it for some of these astronomical values. So I think some of that speculation and someone hunting for these mint games is driving now since January, which is what this graph reflects, a higher level of valuation in new games. So what that means is, even though this analysis I'm sharing with you here provides a snapshot that new games over this period of time wasn't that great a rate of return. Actually, it was the worst rate of return compared to loose games and complete in box games. I think that market is changing a little bit since the time frames that I included in this analysis. So if you want to go into new games or maintain that collection of new games, there's nothing wrong with that. It's just a slightly different horizon. Definitely, it was a bit surprising. And I'm sharing a lot of this valuation, again, for people to understand what gaming means. And as there's more and more talks in the community, especially in the collectors community, and you're starting to see some of these crazy auction values for graded games, I think it's important for people to understand what they mean. Overall, gaming is a good investment, and with time, you're guaranteed to get your initial investment back no matter what. And definitely it's a consolation, sometimes as a means of justification for your loved one on some of these expenditures or investments that you can do. Video games and collecting are overall a good investment. Now, they don't match or compete necessarily with the rates of return that you'll see from stocks and the stock market, but they are a better rate of return from what we saw than a standard, just the standard rate of inflation. Okay? So the good news is your collection will always maintain its value no matter what, and it'll even gain some appreciation. Now, is that the main driver for collecting? And again, it comes down to each person's views of collecting and what their objectives are when they decide to collect. Me, as I've shared before, it's not about the investment. The investment for me, I think, is a bonus component. I do it for the passion of gaming and for the passion that I have with the video games. Like I shared in the beginning of the video, I'm preparing some deeper analysis because I have observed some differences in the rates of return as far as an investment and value growth between different systems. But I want to do a little bit more analysis before I share some of these preliminary conclusions with all of you. There's a lot of folks too that are starting to go into investing via graded games. And, you know, my personal view of that, I think, you know, when you look at what games are selling for some extremely high prices in a graded format, they're really the most common and most prevalent AAA titles. So when you stop to think about that, you know, AAA titles get printed in the million copies type range. I mean, hundreds of thousands of copies. So it's not a matter that these games are hard to find. It's a matter that people are buying some of these games to try to find perfect condition games. And you know, again, it comes down to personal values. For me, I want to play my games, so I don't necessarily buy them to keep them on a shelf. I buy them that if one day I decide I want to play it, boom, I can grab it, open it up, let's go. Okay. These perfectly graded games are really a decoration, a symbol, a status. And what we're starting to see is a lot of speculation around some of these. And really, investors are buying off of other investors. And you're going through some of the standard motions actually that you see in the stock market and the valuation of stocks. A lot of stocks valuation is not driven by really the rate of return that company is providing and how well it's doing financially. Most of the stock valuation is really speculation on the stock's potential and supply and demand of some of that stock. So I think that's a little bit what's happening right now with graded games. So if anybody is going to be venturing there or already venturing there, word of caution, be very careful, because it could be one of those markets that all of a sudden implodes and drops in value significantly. We don't know how long this speculation and some of this upward movement is going to last. It could be there for a while. It could again implode at any moment. Who knows? It's definitely a high risk investment if you want to go into that. But hey, you might get lucky. Okay. So there are some points on collecting as an investment. And I hope you can learn from some of these insights. Again, don't forget to subscribe. Link down below for the YouTube channel and also for my Facebook group. Love to hear some of your thoughts and discussion and the chats, especially in my Facebook group where we can have a little bit more of a dynamic conversation. Thank you all for watching. Take care.